if you think about the narrative from the Main Street media, gosh, like going back to 2012, it's been this narrative that we're going into another housing crash. Next year is the year that the real estate market changes and that we see this big crash. And yet we've not seen it. And the question that I think people should be asking themselves and pondering and thinking about is, how is it even possible that we went from 2.75% mortgage rates in 2020 to 8% mortgage rates in 2024? And even today, we're a little bit north of 7%. How is it possible that mortgage rates almost tripled, and yet the housing market is still up? Now, granted, there are some areas in high cost of living areas that have seen a bit of a pullback from kind of like the market peak in value. Some of those neighborhoods peaked in 2023, saw a little bit of a drawdown. But even most of those areas, you're talking about a 3 or 5, a 6% correction. Nationally, home values had continued to go up over that period of time. So how is that possible? If you don't understand how that's possible, you don't understand the housing market. So let me try to explain why I believe that is true. And before I jump into the actual, learning lesson, I want to just show people this. This is average annual home appreciation nationally. So this isn't San Francisco. This isn't New York. There are some high cost of living areas that have higher highs and lower lows. This is the national average. And I broke it down by decade: 1940s, 1950s, 1960s, 1970s, 1980s. The green years mean that the value, the national value of homes appreciated. It went up. So in 1942, it went up 3%. If we look at the decade, and I don't have data for 40 and 41, I just have 42 through 49. But if you look at that 8 years, 129% appreciation in the 40s. How about the 50s? 36% appreciate. And this makes sense, right, guys? Because this was the 40s, is right after the Great Depression. So I'm sure there was a huge drawdown before and then a massive rebound in the 40s. 36% in appreciation in the 50s, 23% appreciation in the 60s, 130% appreciation in the 70s because you had massive inflation. In the 80s, 77% appreciation. You had to wait from 1942 all the way to 1990 before you had a negative 1% national appreciation rate. 1991, negative 0.1%. The decade was still up 30%. How about the 2000s, right? This is the beginning half of the Great Recession. The decade still up 66%, although housing was down 5% in 2007, 12% in 2008, 4% in 2009, started the 2010s down 4%, 2011 down 4%, still ended the decade up 45%. And in the first 1, 2, 3, 4, I don't have 24 numbers in here, but I know it's about 6%. In the first 5 years, 1, 2, 3, 4, 5, of 2020s, we're going to be up already 45% appreciation. So that means real estate has gone up 73 years. It's gone down 7 years, and it had 1 year in 1965 where it didn't go up or down. It was a tie game. That means that residential real estate has a 90% win rate as it relates to appreciation versus depreciation. So that's the first thing that I think people need to understand as a backdrop. Why is that? Okay, so that's the question. Why is that? It's demographics. Demographics are destiny. It's all about population growth and the percentage of home ownership. And here's what most people don't understand. And this is why I believe home values nationally have continued to go up despite rates going from 2.5% to 8%. Okay. So let's look at each generation one at a time. We got the boomers. Their current age is between 60 and 78. That's the current window of the boomers. 71 million population. This was the largest cohort up until this time in American history. They have a 74% home ownership rate. And I'm going to get more into these in just a minute. Gen X, they're currently 44 to 59, 65 million population. So a smaller cohort. Why was that? Roe versus Wade, Contraception became mainstream in this time period, and we saw a pretty significant decrease in the number of birth rates. Your birth rates dropped from about 4 million a year down to about 3 million a year, and you saw a big drop in birth rates. Millennials, they're currently 28 to 43. There's 73 million of them. It's greater than the boomers. Followed immediately behind the millennials are the Gen Zs, 12 to 27, 69 million. You add these two cohorts up, it's double the boomers. This is a massive cohort. Well, if we only knew the home ownership rates and the age that people became first-time home buyers, we could predict the future demand for the housing market. Good news. We know that information. So here we go. The millennials, which I mentioned were 73 million, the median age is 35, and the median age for a first-time home buyer is 38. That means you have this huge cohort that are becoming the age of first-time home buyers. Their current home ownership rate is 45% because their median age is 35. But we know that the leading edge boomers, who are now 40 or 40 to 43, their home ownership rate is 55%. So we can see as boomers get older, millennials get older, their home ownership rate goes up. We can apply that increase in home ownership rate to the size of the cohort, and we can set eyes on what that future demand is going to be. And by the way, same thing for the Gen Z, right? Their current home ownership rate is 65%. When they were 30, they had a 42% home ownership rate. When they were 40, they have a 59% home ownership rate. So we can see the same thing happens with every generation. As they get older, the home ownership rate goes up. As they get older, home ownership rate goes up. That makes sense so far, guys?
Yep. Yeah, very interesting.
Cool. All right. So millennials with a median age of 30, there's 40 million. Their home ownership rate is 33%. And we know as these 30-year-old millennials move towards 40-year-old millennials, we know that that home ownership rate is going to increase from 33% to 55%. And we know there's 40 million of them that are in this trajectory over the next 10 years. So over the next 10 years, the home ownership rate should rise, and we estimate that will be approximately 8.5 million more homeowners. It's actually a little bit more than that. It's actually about 10 million more homeowners, but we've handicapped this number by 1.5 million because we believe there's going to be some attrition in the home ownership rate of the boomers. Because a few of those people are going to have to move in with their kids, or they're going to have to move into retirement homes. So, we've actually handicapped that number by about 1.5 million. All right. How about Gen Z? Because what happens after the millennials? Well, the Gen Z, there's 69 million of them. The median age is 20 because they're between 12 and 27 right now. The current home ownership rate is 8. Do you see the opportunity? That is a huge cohort that has an 8% current home ownership rate. Over the next 10 years, that should raise to 33%, which is about the ownership percentage of millennials when they raised 30, when they became 30. So as the Gen Z moves from 20 to 30, we would assume that they're going to have a similar type ownership. That's 17 million more home buyers. So if you add those up, I'll show you the next graph in just a sec. So if you add that up, that's 25.5 million new homeowners. That doesn't include anybody moving into the United States from another country. That doesn't include any Gen Zers, right? Because we have a current home ownership rate Gen Xers. That doesn't include any Gen Xers. Our current Gen Xer home ownership rate is 65%. Boomers is 74%. So we could very well see an increase in home ownership rate from Gen X. We're excluding that. We're excluding any migration. Let's just look at millennials and Gen Z. 25.5 million more buyers coming online in the next 10 years. That's 2.5 million buyers a year. Guess how many new homes we're bringing to market? Not 2.5 million a year. It's about 1.3 million new housing starts. If you look at the difference between multifamily, which is apartments, and single family homes, we're bringing about 1.3 million housing completions a year. And you've got 2.5 million per year in demand coming just from these two cohorts. One other way to say this, and I'll stop for a second, take a breath. This is your birth rates. So if we look at birth rates, these are the birth rates from Gen X. This is my generation. It was the lower birth rates down in the mid 3 millions. But if you move forward, 1987, people born in 1987 are now 38. That's the average of the average first-time homebuyer age right now. Look at the number of years, the growth trend in birth rates moving forward over the next 4 or 5 years. And even as this levels off from millennials into Gen Z, you still have a birth rate range around 4.1 million. So you've got a lot of demand, is what I'm pointing out here, over the next decade as these younger generations become the age of first-time homebuyers and they see their home ownership rate shoot up.
You want to see the entire episode? Click here. If you want to learn how investors use infinite banking to increase their returns and lower their taxes, click here. If you want to see if infinite banking is for you and you have some questions, hop on a discovery call with us and one of our coaches. The link for that will be in the description.